Yes, good morning, and thank you for having me today. We had a very strong start to the year. Organic sales growth of 8% in the first 3 months of the year and over proportional EBIT growth of 12%. We're very confident for the year. We have positioned Holcim very well, especially into the North American market, where we also saw significant volume growth in building materials for Holcim, between 3 to 7%, depending on the product line we are having. And we see similar trends in Latin America, where we have big orders for infrastructure projects, also with significant volume demand. Whereas in Europe, we have a bit more softer demand, which was already happening last year due to the burden in Europe from the Ukraine war, mainly, where we have significant cost and energy cost inflation.
By the line in the earnings report around China at this stage, how is China's economic reopening now different from trading conditions in China before the pandemic?
Yes, I shared with you in the past, we had last year, my estimate for building materials in China was a decline, 5 to 10%. Now they have reopened the country. We see this already in Q1 with stable demand, and now we expect acceleration of demand in China for the remaining months of the year.
Hey, yeah, nice to see you, sir. Look, there's some very interesting stuff you were saying about parts where there's softening demand and parts also on the other side where raw material costs are coming off as well. I guess my net question of that is, what's that doing to your overall margin? Are you managing to expand, contract, or just hold steady?
We have done our homework last year, both in cost mitigation, in bringing in more alternative energy sources, going for renewables, and of course also increasing our pricing responsibly with the customer. So we are in a very good spot now for the year. So we have increasing margins in Q1, and we expect this to continue throughout 2023.
Fair enough. And what about the interest rate environment? Board is saying this morning you do not see the rising interest rates as an issue. Well, then that means the central banks have failed because they're trying to make it an issue so we slow down the economy, or certainly slow down the rate of employment growth and inflation as well. So why aren't interest rates an issue, and shouldn't they be an issue?
No, look, we are not having an easy market environment out there. We have cost inflation, we have interest rates hikes, we have the war in the Ukraine, we have other geopolitical tensions in the world. So we're not saying we have easy markets. We just, at Holcim, we have done the homework, we positioned the company well, and we're gonna have a good 2023.
Yeah, and you've been on an acquisition drive when it comes to the products business especially. What are you seeing now in terms of what you've got in the portfolio mix, and how many more acquisitions are you intending at this stage?
We had a very dynamic start of the year. We did already 12 acquisitions in the first 3 months of the year, a record number for us. So we have a very good pipeline of targets where we like to welcome to the Holcim family, and this will be another driver of our growth for the years to come.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.